Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the weekly time frame with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside, and inside the yellow wave 3 we then have the sub-degree green count 1, 2, 3, 4, looking for a 5 towards the upside. The most common target for your wave 5 is between 78.6k and 110.6k. That is of course quite a big area, so on the lower time frames it will be important to count the waves to minimize the target area for the green wave 5. After the green wave 5 is finished, and therefore the yellow wave 3, we expect a bigger sideways range to form in a wave 4, after which we then want to see one more push to the upside in a wave 5. If the low of wave 4 is in and we are looking for bullish continuation, then the bullish scenario is an impulse to the upside, 1, 2, 3, 4, and looking for a wave 5. As long as price has not taken the high of this wave 3, the invalidation is going to be the high of wave 1, because a wave 1 and wave 4 are not allowed to overlap. Therefore the invalidation is at 65.5k. The target for your wave 5 is between 73.4k and 77k. Inside wave 4 we're then looking for a triangle structure. Here we have a finished 5-wave sideways move in a wave A, B, C, D, and eventually a wave E. After wave E, we then want to see impulsive continuation to the upside to eventually finish that wave 5. On the lower time frames, this is then what we're looking for. We have a wave 1 to the upside, wave 1, 2, 3, 4, 5 wave structure, looking for a retracement to the downside in a wave 2. The reason that we cannot count this as a wave 1, 2, 3, 4, 5 now is because wave 1 and wave 4 would have overlap, and in an impulse that is not allowed unless we start talking about diagonals or double 1-2s, but at the moment that is not yet relevant. So here the common target for your wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the high of wave 1, giving you a target between 69.5k and 68.2k. The 0.382 is an uncommon target for a wave 2, and the 886 is very rare at 67.7k and the 382 at 70k. What you do see is that the recent low here is at least made after the 0.382 Fib time. Taken from the low to the high of this wave 1, the 382 is generally a minimum target for a wave 2, and it's good to see. Of course, price-wise, preferably we look for a deeper retracement, because this low here did not even touch the 0.382. Therefore, in this particular scenario, if we are looking for a deeper wave 2 to the downside, we have two ideas. The first structure here to the downside can be counted as a 3-wave structure, and then a wave A or W, looking for either a wave X and then a wave Y to the downside, or a wave B4 flat and then a wave C to the downside. The common target for your wave X is between 71.1k and 71.6k. The most common target for a wave B, and the most common flat is an expanding flat, is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low, giving you a target between 72.2k and 72.5k. An alternative scenario is that we start counting an impulse from the 66.6k low in a wave 1, 2, 1, 2, 3, 4, 5, finishing the blue wave 3, looking for a wave 4 and then a wave 5 to the upside. The probabilities are reduced for this scenario, as then the range has to end at this low over here, and at the moment that has lower probabilities. The common target area for your wave 4 though is between the 236 and the 0.5, taken from the low of 2 to the high of 3, giving you a target area between 70.7k and 69.5k. The invalidation for this scenario is price moving to the downside and touching 69k. In this scenario, if we're looking for a wave 5, we do have some interesting resistance above price, which is the blue box here between 73.1k and 73.6k. The closest box of support is the blue box here between 68.6k and 69.1k, which, as you can see, is on top of the 618 and is not really relevant for this scenario, but is relevant for this wave 1, 2, as the golden pocket for wave 2 is in confluence with the blue box. The bearish scenario on the daily time frame is a retracement to the downside in a wave 2. In this scenario, we then have a finished 1, 2, 3, 4, 5 wave structure, look for a wave 2 to the downside, and then continuation to the upside in a wave 3, sideways 4 and 5. The common target for your wave 2 is between the 05 and the 786, 59.8k, 64.2k. The 382 at 66k is uncommon, the 886 is rare, 58.2k. Inside this wave 2, we then look for a 3-wave corrective structure in a zigzag, a 535. Wave B hit the 886, which is a common target for a wave B, and the common target for wave C is on the chart between the 1 and the 1.618, 66k, 62.5k. There are, however, a couple of reasons why this scenario has a lower probability. First of all, wave A on the lower time frames is a wave 1, 2, 3, 4 and an extended 5th wave structure, which is rare in an impulse, as by far most commonly wave 3 is the extended structure. And also on the lower time frames in the range that we are in currently, the probabilities are higher that the first structure to the downside is a 3-waver and not an impulsive structure. Going to the 15-minute time frame, we do have some CVD divergences on the chart. Higher low in price, lower low on this CVD, a bullish CVD divergence. The target would be this high here at 71.8k. On the chart, you can see it like this. A higher low in price, but we have a lower low on the blue line, which is a bullish CVD divergence. We made a low here and currently price is moving to the upside, and also here we see a little bit of bullish CVD divergence, higher low in price, lower low on the CVD, but this one already played out, and now that price has been moving to the upside, we continue to observe what new CVD divergences appear. If we then go to the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bullish scenario that I've shown in this video, and bearish scenarios at the moment are not yet relevant. On the daily time frame, also higher probabilities for the bullish scenario compared to the bearish scenario, same on the 4-hour time frame, and on the 1-hour time frame, the probabilities are higher to take out this high eventually at 71.8k. Currently, the highest probability scenario locally here would be to look for a wave 2 to the downside, after which we then want to see a wave 3, purely because of the triangle inside this range, which out of the different scenarios currently has the highest probability. And inside wave 2, we then look for potential WXY or a flat in an ABC. The second highest probability scenario is that we're looking for a wave 5 in a wave 1, 2, 3, 4 and a wave 5 to the upside, potentially rejecting at 73k, looking for resistance and proof of weakness to then look for a retracement towards the downside. The lowest probability at the moment would be that a wave 1 is finished, wave 2 is finished, and we look for continuation to the upside in a wave 3. The probabilities for the bears will increase if price would move to the downside and takes out 67.2k. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.